Hi, welcome to Carnegie and our interview with Ependion. I've got with me Jenny Sjödahl, who is CEO and president of Ependion. Hi, Jenny.
Hi there.
So Q2 earnings today, this morning, or this afternoon. If we start with the general question, then maybe go into the business areas or business entities. Looking at the order intake, it was stable for the fourth quarter in a row, even though it was down significantly year on year, but it was at a level of around 500 million. How would you describe the market and maybe the direction?
Yeah, the thing is that we come from a situation that has been extraordinary, actually. The pandemic leading to the component crisis, leading to very special years, both 2022 and 2023. And I think that we are still, in a way, seeing the effects of that, where 2023 came out as an extremely strong year. And the pattern of the order pattern of our customers has been, changing quite a lot during this period. And I think now we are in a situation where some customers have built inventory during this strange situation. So that is one effect. The other one is that the high interest rates and the general uncertainty on the market has led to customers being more cautious, projects being somewhat delayed, and so on. So I think we are seeing kind of a perfect storm that results in this kind of dampened demand at the moment.
But how would you, so two things, one follow up on the direction. So maybe, are you seeing, if you just would talk about direction, is it kind of stable at these levels, or are you seeing a little bit of a movement in a direction?
I think in general, we can say that it's stable at this level. We are starting to see maybe some positive signs in some markets, but it's too early to say, really. So I would say stable at this point.
We talk about the 500 million krona in order level. Would you say that's 4 quarters now, more or less around 500 krona, 500 million? Would you say that we have established kind of a normal level here to grow from? Is that how we should see it?
That is how I would like to see it. Yes, yes, I think you can say that would be our new baseline, so to say.
Mm. And if we go into the different business entities and starting with Westermo and maybe the train segment, how are the customers acting? And in particular, the large customers that changed order horizon last year and hence distorted the situation.
Yeah, I think there we are back now to a more normalized situation. The order backlog of our key rail customers is still very strong. So that is not the issue. I think that there might be some projects being delayed also on their side when the train operators actually ordering the trains need to finance the train fleets and so on. So that could be one effect. But I think in general, the health of the order backlog of our customers is really strong.
Mm-hmm. And if you talk about demand and kind of what kind of discussions you're having, would you say that not much have changed in terms of just demand and what their outlook and what they want to do?
Yeah, I would say that. I think that the situation is quite stable for them. So I think demand should be at a stable level. And then, of course, it can vary when the orders finally come to us, so to say, depending on projects going on in different parts of the world on behalf of our customers. But in general, I should say it's quite stable.
And you made a deal this during the quarter, Blu Wireless, where you bought a minority share of the company. Tell us a little bit about Blu Wireless and the significance of that deal.
Yes, so Blu Wireless is a UK-based company, and they have been working for the last 10 years or so on productizing a new communication technology, you can say, for train-to-track communication. So basically, connectivity for high-speed trains. And this technology is based on something that is called millimeter wave, which is a very short wavelength that is also able to carry huge amounts of data. But it also has its challenges in terms of interference and some things that have needed to be overcome. But they have productized this technology, and we find it quite exciting because we believe it will be an important piece of the puzzle when it comes to improving the connectivity, basically, of trains, internet connectivity for passengers, but also connectivity for the operators for their needs, so to say, to transmit data from the train to ground and from the ground to the train. So an exciting technology going ahead as we can see it.
And where are you in the stages of, I mean, where are they in the stages of their development, so to speak?
It's quite early days in one respect, but there are a couple of lighthouse projects that are really being deployed now. So the technology is being used in real applications now and being tested in real applications, and it's looking quite quite promising. So even though they are in a scale-up phase, we think that we believe in this technology going forward.
Mm-hmm. And if I look at this deal, the Blu Wireless that you bought, and the margin is coming off, and you are adapting the cost base a bit, but not too much, and you sound quite confident, and you see the current weakness as temporary. Talk a little bit about what you're seeing and why you're that confident, and what is needed for demand to take off.
Yeah, we've had a strategy in place for Westermo now for quite some time, which we believe a lot in. We are well positioned in markets that are bound to grow in the coming years for structural reasons connected to the big megatrends. So we feel quite confident that we are in the right place and working with the right customers and right markets. And the same is true now for Beijer Electronics. There we have now finally also in place a clear strategy, a clear focused strategy. So with that, I think it's important to look a little bit beyond, the short-term quarterly results and really focus on our vision of really building a very strong position in our target segments. And that can hurt our bottom line a little bit short term. But for us, I believe a lot in what we are doing, and that's why we have this view that we want to continue with some strategic initiatives for the future growth.
Because you're keeping your workforce largely intact. You keep spending on R&D, and that signals quite strong that you really believe in the future.
Yeah, it does. That doesn't mean that we are not taking measures to take down costs. We have actually removed quite a few temporary consultants, so to say, in different areas. We have reduced the workforce related to our production and so on. So we have taken down costs quite significantly. But looking at our cost structure, of course, a lot of the cost sits within the R&D area, so to say, and there we have been cautious. Actually, we don't want to touch significantly the resources in R&D because there's so much interesting project opportunities and customer opportunities ongoing there that we want to continue investing in that.
Mm-hmm. And we come back to Beijer Electronics and the new family of products coming out, but you also keep investing in Westermo technology and in R&D in Westermo as well.
Yes, definitely.
And if we move on, talk a little bit about Beijer Electronics. So here you also see lower demand, but looking at sales is actually positive. What are you seeing here on the ground, and what's demand like?
Yeah, in Beijer Electronics, demand has been somewhat sluggish for 5 quarters in a row now, and we are seeing it moving basically sideways. We are not seeing a great improvement, but it's not deteriorating further either. And with the change pattern of customer behavior, where customers place orders with shorter horizon, we see that we have been able to still keep up the revenue on a, let's say, decent level in Beijer Electronics despite the lower order booking. So right now and right here we see that situation being unchanged.
It's mainly the manufacturing part which is pushing down, right? the other core segments or the new segments are doing okay.
That's correct, yes.
And talking about that, the new strategy, you presented new strategy at the Capital Markets Day, and you did the strategic review during last fall. How is the implementation progressing?
I think it's progressing well. I think Christine and the team have really taken this strategy to their heart, so to say, and they are really working hard now to implement it. We have put in place in Beijer Electronics a global sales, marketing and technical support organization, where before we had 3 different regions working quite independently. That's a really good step forward, I think, because it means that we can share experiences and work in a more effective way across the globe. So that's one example of how the strategy implementation is proceeding. So I think it's proceeding well.
So looking at the margin, you had a single-digit margin in Q4, and then it came up sequentially in Q1, and now you have the display solutions impacting the mix. Which is quite significant. How long will this pressure remain, you think?
We are talking about Beijer Electronics now,
Yes.
right? Yes. So I think that we have taken the biggest hit now in the mix effect, so to say, in Q2, because we've been shipping out most of the remaining volumes for display solutions in the quarter. However, we have some more volumes related to another customer, which is also within that same product family, that will be shipped out during the second half of the year. But I would say that the majority of that has been swallowed, so to say.
And talking about the new family, because you have the X3 coming out end of this year.
Yes.
How do you expect? I mean, what's the initial feedback, and what are customers saying, and what are your expectations on the launch and on the new product family?
Yeah, we actually have very high expectations on this launch. This new generation is preceding the X2 family, and really it has a much more modern functionality. It has significantly strengthened cybersecurity features. So it's really a quite brand new family with enhanced functionality and features, which we think will help our customers in an even better way than the older generation. So it's a very exciting new family.
And if you look at previous launches, like for instance when X2 came, is it possible to say and look back and see that you saw an acceleration of sales on the back of these kind of product launches, or is it more like an evolving development?
I think over time it's going to help accelerating the overall volume, but we should also know that, of course, it takes a bit of time to do the switchover, because customers have their product lines, their product generations, and so on, and therefore it will take some time, and that we need to respect. But definitely we are aiming for increasing sales, of course, with this new modern family.
Then maybe finally going back to talk about the whole group, and you're talking about the operating leverage pushing margins down, and we talked a lot about operating leverage in the past. And I assume you expect it to work the other way too. That is, it's pushing margin down now, but then when volumes come back, it will work the other way.
Yes, definitely it will. And as you say, it does work both ways. And of course, that is why it's hard for us to compensate 100% when volumes drop significantly in terms of profitability. But yes, we definitely expect it to work the other way when volumes and demand come back. And I would also say that the changes that we have done under the hood in the group in the last couple of years really puts us in an even stronger position to benefit from the markets picking up and volumes coming back. So yes, definitely I'm looking forward to that effect.
So in essence, would you say that you are not that there's always more to do, but you're kind of ready, and volumes is what is needed for you to get to the 15% you're looking for and you're targeting? That's the
Yes.
missing piece.
Basically, I would say that there is, of course, always more to be done in terms of operational efficiency and so on. But I think we have done a lot, and we are in the process of doing even more. So yes, I would say that we are well positioned to go for that.
And you were talking a little bit about your targets on the call. The 10% organic growth target is still very much achievable.
It is definitely achievable mid-term, so to say, but we need the market to come back and help us a little bit in order to get there for sure.
And then you expect the margins to follow.
Yes, definitely.
Okay, Jenny, with that, thank you very much for coming here to talk to us.
Thank you, Marcus.